All right, guys, let's get into the strategy. All right, guys. So not only does my strategy work on lower time frames for day trading, but it also works on a weekly sentiment and a monthly sentiment. So whether you want to day trade or if you want to swing trade, the strategy works seamless. I've tried it. I currently do it. I always take one weekly swing, one monthly swing, and then I day traded all throughout the week, whether it's Sunday to Friday. Essentially, how I always start out my week would typically be on a Sunday. And the first thing that I do is I pull up a monthly chart. Now, the first thing I do is I look for my major supply zones. And how I identify that is pivot points within the chart. Now, for instance, I always like to mark them down on major pivot points, right? So what I'm essentially looking for are higher highs, higher lows, and lower highs. Not only that, but I'm also looking for major supply and demand zones. So for instance, on this monthly chart, I can clearly see that this is a support level here. I'm also seeing a support level here. We see one there. We see one here. There's one there. I'd say there's one right now. Actually, I'd say this is more like right here and right here. Now, without getting too crazy, I already have a monthly sentiment set out. Now, what I do is I work my way down to the lower time frames. Now I pull up a weekly chart, and what I'm looking for are just stronger zones within that monthly. So what I'm seeing here is I could adjust this one just slightly, maybe there. I think that's a little bit cleaner. I think that this one here is much cleaner as well. And I kind of like where these are. I think I would move this here. Something like that. Then we make our way down to the daily sentiment. And what I'm looking for is about a week back. You don't want to go back like 1, 2, 3, 4, 5 months unless a change in character, or if we're going from bearish to bullish or bullish to bearish sentiment. But essentially on the daily time frame here, I'm seeing that this is a supply zone right here. There's another one right here. And there's actually one right around here. I'd say it's right there. Here we do have another one. Let's say around right there. And again, what I'm looking for are pivot points. Where did the chart decide to react from? Because that's where the supply zones, if I want to enter trades from here on out, those areas of interest are going to be more volatile. On a 4-minute, on a 4-hour, let's take a look at this here. I kind of like these zones. I don't think I really want to change any of these up here. Kind of like this one here. So let's draw one here. That's it right there. Kind of like that one. And kind of, yeah. Kind of like this area. And I just keep working my way down. So now I am on the 2 hour. And I'm I'm just looking for areas of interest. And essentially what I'm looking for are pivot points here, bounce points, or rejections. And my overall sentiment right now is bullish, and I should have gone over that first. So obviously one of the first things that you want to check on that bigger time frame is what is your overall sentiment. So I know that my overall sentiment here is bullish. Now while I'm here, I'm also going to start drawing in some trend lines without crossing over any wicks on the chart, and I always go like currently to where we're at. So we have one there, we have one, I'd say about right there. And these don't have to be too perfect, but you definitely want to be pretty close. Let's say like right there. So we know that those are the bullish sentiments. And if we go down to lower time frames, there's not really a bearish sentiment at the moment. So in this case, I'd only be looking for longs. I wouldn't be really looking for any shorts. Now just in case, if the market does decide to, break structure and come the other way or pivot, then what I can do is identify my bearish sentiment. And I know that this is the overall bearish sentiment because here price was pushing down until it broke out, and then that's when we did the gap up. Now another thing, I definitely want to keep my eye on this gap here, because if you guys follow me, you guys know all gaps for the most part get filled. So we'll keep that in mind there. And right now, as you guys can see, I'm identifying all of this without using any indicators. This essentially is just a trend line strategy that you can use, and it's very effective in the market, guys. Very effective. Like that. I think that's pretty good right there. And then I'm actually kind of like this point as well. So I kind of like that. But essentially what it shows me is that when price is trading, it's trading above those areas. If not, you could essentially take a short in between each channel. But again, I'd rather trade with trend than against it. Let's work our way down to a 1 hour here and see how this is looking. Another thing that you can do is you can get other sentiments as well. So we know that overall this is our most pivotal, strongest form on the map. Now, of course, this should be down a little bit, but kind of counting it out for the moment. You don't want to be too lost, and you don't want to make your chart too busy. You just kind of want the areas that are really important, not like every single line. But I'm used to looking at my charts this way, so yeah. Let's take a look at the 30. $15. 10 minute. And this is where you're going to want to start to zoom in, because essentially what you're looking for is the pivot points within the smaller time frames for entries and exits. Now on a bigger time frame, this does look like a bullish flag to me. Looks like a massive bullish flag, but we're also starting to fail to break highs. So as you can see here, this was a bullish sentiment. We just barely broke it, but now we're creating a double top back to the downside. So essentially what I'd be looking for here is a bounce off of this trend line, probably somewhere around here off this bullish supply, or maybe here, or maybe even possibly here. Somewhere along this trend line, if we can hold this, then I feel comfortable trading it to the upside, but I really wouldn't feel comfortable as long as it holds 9/12.75. So if, for instance, if this trade were to hold, right, come up and fail here, but then hold the trend line, reclaim it, and then bounce within this trend line back up to the upside and hold, then I'd be looking for that trade in this area of interest. And essentially where that would be somewhere around here. I'd probably be looking for this trade, right? So I know that I have an area of interest to the upside between 925.75 and 944.50. That's essentially where I'd be looking for a trade at this moment. Now, the way I'd get the best entry on that would be on a 1 and a 5 minute. And again, I'd be waiting for this to clearly, at some point before it breaks this level at 939.50, to wick the trend line. Because if it doesn't wick the trend line, it doesn't confirm prices that strong to me. And essentially at any point it can come back and test that trend line, and you don't want to be caught in that trade. You want to wait for price to react off that trend line and continue back up to the upside and look for your nearest bullish supply in this case, because we are taking a long. So let's see, essentially, yeah, I think that's good right there. So essentially I've just identified my area of interest, I know my trade plan, and I did it without any indicators. Right now we have that there, but to really get a better idea, I would pull open my smart money concept and try to get a feel of where we are as far as where the smart money is sitting. And right now we have a discount zone at around 813, which we actually have a supply zone here that we marked down. We have an equilibrium zone, which also looks like it is that area where we would want price to bounce off of. So in this case, I'd actually be waiting for this to get down at around 874, and that could also be a trade back up to this zone here for a profit, and then wait for price to retest one more time off of the 913, or I'm sorry, the 912 supply zone back up to the upside. But you really, I mean, there's a couple different ways that you can look at that there, but essentially it is a long for me still at this time until it fails the trend line. Now if it fails trend line and starts to head back down here, then I'd be more willing to short this to this order block, which would be the 755, or I could also wait, be patient, and look to see if we're gonna bounce the 755, hold this trend line back up to the upside. So a couple different trade plans that you can make just from that there. Now another indication that you can use is your orbandtargets, and you can kind of just see where price is trading. According to orb, we are bullish, and these would be your targets back up to the upside. And essentially here what I would be looking for is a bounce of orb around here somewhere. So between 871.25 and 866.75. Why? Because I'd be looking for orb to hold price and continue back up to the upside, because it's giving me a bullish overall sentiment. Now if we feel it, I wouldn't feel comfortable in this trend line or within this range. I'd look for a fail, a full wick and failure to the downside, but I'd be looking for an entry probably off of the orb low. And what I would be looking for is, if we do bounce area, do we come up, reject on the retest on the orb low, and then continue to push down. Now you also have VWAP. VWAP is going to essentially tell you where price is trading between what range, and in this case I have 2, 3, and 1 band, or I'm sorry, a 3, 2, 1 band, and the main VWAP, where the strength and volatility is actually sitting. So This is why you want to be patient, because you don't want to kind of just catch this on up here somewhere. You would really want VWAP to show that it's going to start coming up here to push back up, or if we start to get a failure, then what that would look like would essentially be a failure of VWAP, maybe a bounce, a retest, and then back down into these other bands. Now the SMAs are your overall strength for longer time frames in the chart. You have your 50, 100, and 200, and essentially when price is trading above it, that's the strength up to the upside. And when price starts to cross these, what you're essentially looking for is a failure of the SMA on the retest back to the downside, and then vice versa. Once you're starting to come back up through it here, you'd be looking for the retest off the 50 EMA back up to the upside. And that's pretty much how you would trade it. If it retests bounce, you'd be looking for the upside. If it retests short, or I'm sorry, if it retests and fails and rejects price, then you would be trading it to the downside. Now you also have volume, which volume is pretty nice, clean, simple indication. Essentially what volume is telling you is the strength of that current candle. So although here on the chart the candle might not be bigger, it might actually be more volatile than, maybe say a candle here that shows or appears to be bigger. A smaller candle could still be more volatile and powerful than a candle that is actually bigger. So this would tell me which candles those are. So for instance, you see how, let's see here, see how this candle is actually slightly smaller than this one, but it still was able to push price back over. Now what you're actually looking for is for those candles to start becoming weaker, or for those candles to start stacking up, so that you know the volatility within them. And you're kind of seeing that in real time here. And then your money flow profile. Your money flow profile is essentially going to tell you where your bullish and bearish contracts currently sit in the market and where they're waiting to get filled. And then it tells you in real time as they're getting filled, they start to get smaller. But it essentially not only tells you the bearish and bullish contracts, but how many contracts and where they're sitting and how much is left for those entire stream of contracts to get filled. Now another thing, on the right side, you're going to notice that you have the overall history of that price action and how many contracts got traded in that area of interest. So for instance, in this area there was 16 million contracts traded. Down here there was about 45 million contracts traded, and we're not talking about $45 million, we're actually talking 45 million contracts. So I like that indicator because it tells me exactly in real time where the current contracts are, but it also tells me the overall history of where price was trading at that time. Now another thing, let's erase this here. Another thing that I'm looking for are higher highs and higher lows, and I have the other video which I'll show you guys an example of that. I'll show you, I'll clip it in here. But essentially I like reading higher highs, higher lows, lower lows, and lower highs, because it shows you momentum into price, and it's pretty strong on pivot points, and it's usually where you get your biggest breakout. And it's, for me, I think it's a better indication for swings on a weekly and on a monthly, but I think mostly on a weekly is the strongest, or at least the cleanest trade. Whereas monthly, you know, there's more room for risk management, so you have to really manage that trade just a little bit cleaner. But essentially, guys, in a nutshell, that's my strategy. And if you want to see me trade it in real time, I'm always trading it on TikTok live, so feel free to join those anytime. I probably will be going more. I might start live streaming more on YouTube and Kick soon, so stay tuned for that. But this is the exact strategy I execute every single day on the markets with tons of other students and tons of other people that watch me trade. So it's a profitable strategy. It's the strongest strategy that I've ever traded, and it is absolutely the most profitable strategy that has made me a 7-figure trader at this point. So sorry for my voice, guys. I'm kind of losing it. The Knicks won, and so it was a good weekend. Puerto Rican Day Parade was also on Sunday, so I'm just kind of getting back my my voice here, but yeah, guys, that's my overall strategy. I think it's a very simple strategy. I don't overcomplicate it, and for the most part, it works on almost every time frame. But if you leverage every single time frame, from your monthly, your weekly, your daily, your 4-hour, your 2-hour, and your 1 hour, down to the 1, 5, 10, 15, then you're really going to be able to get extremely strong points in the market. And not only are you going to stay positive for a longer portion of your trade, but you're going to minimize the risk, and you're also going to maximize the percentage of it becoming bullish or bearish, if that's what you're looking for. But I really think that it's a very simple strategy to understand, guys. It's not very complex. There's not much to it. And if you do trade this every single day, it just becomes 1-in-1 with you. All right, guys, now let's recap on the strategy. For my monthly swings, I'm essentially looking to take a monthly swing at the beginning of the month to the end of the month. On my weekly swings, I'm looking to take a trade either Sunday evening into Friday evening, or Monday morning into Friday evening. And then for my day trades, depending which session I'm trading, if we're trading Asia session, then I'm essentially looking for a trade from 8:30, 9 o'clock, even 9:30 into about 11:30 at night. And for Sydney session, I'm looking for a trade around 2:30 in the morning, 3:30 in the morning. And then for London session, I'm usually looking for a trade around 4:30 to 6:30 in the morning, up until about 8 o'clock in the morning. Now for New York session, I'm looking for a trade anywhere between 9:45, 10 o'clock, and even 11 o'clock, 10:15, depending how the market's looking. But for the most part, I like to let the market sit for about 15 minutes after 9:30. So between 9:45 and 10:15ish is when I like to take a trade. And then I look for a second trade if I'm going to take a second trade on that New York session, depending how long I'm trading that day, around 1 o'clock, 1:30ish to about 2:30. Then the fast markets would kick in, and I either look to position at 3 or 3:30 into the close. Then I have another strategy that I personally like to do, and I just call it the New York close into the Asia open. And essentially what I'm looking for is the gap up or the gap down in the Asia market between the New York close and the Asia market open. And that gap usually happens between 6 and 6:05, 6:10. It's about I'd say a max of 15-minute trade. And essentially you position yourself at 4:57 before the market closes at 5 on the New York session. Then you look to close the position either to the gap down or to the gap up when the Asia market opens at 6. Usually at 6:10, 6:15 max is usually when I close that position. But how I overall get that sentiment is by getting my overall sentiment from that New York session trade, right? So if the New York session was bullish, then I mostly look for a gap down on the Asia market. If the New York session was bearish, then I look for the gap up in the Asia market. So it's not a trade that I recommend for prop firm traders, and it's not a trade that I recommend for traders who are not very experienced at understanding the market and its sentiment and understanding the major price, supply and demand zones, as well as the trend lines, because it can go very bad very quickly if you do not understand that strategy. But in a sense, it is a New York close into an Asia market. You take the trade at 4:57 p.m. and then you exit the trade at around 6:10 p.m. that evening.